Good morning. I'm Vince. This is the Gold Fix. It's Monday, President's Day. Hope everyone's having a good day and had a good weekend. Okay. Tentatively titled The Most Bullish Analysis by a Bearish Bank Ever. Awkward but true title. I'll make it prettier later on. Today, we're going to have a discussion with Chris Marcus at 1 p.m. about what the BRICS are up to in their quest for dollar independence. Tune in for that. If you cannot, however, it will be posted here, all access, tomorrow. Michael Oliver's MSA report has an important technical divergence in gold and silver worth looking into that should resolve with the whole complex trading higher over the next few months if it plays out as he sees. We touch on that here today. Now, finally and significantly, we just received a Bullion Bank's gold report that frankly was surprising in its tactical insights and price outlook. We will touch on that here as a preview for a full analysis tomorrow. The Sunday founders discussion, not founders, Sunday's founders discussion will be emailed also today. Some advanced discussion on gold options flows are in there if I recorded it. Highly recommend that if you're an options person and look at options flows and how they affect the gold market directionally. Today, Israeli PM Netanyahu said Hamas's demands and negotiations are delusional, and they will keep fighting until their goals are achieved. That may be why the markets did what they did a little bit last week. All right, current prices. Dollar is down 6. Bond yields are flat to up. The S&P is up 8 handles. The VIX is up 44 bips. Gold is up 560. Silver down 32. Off the lows, but not strong. Gold off the highs. Platinum up 6. Palladium up 5 and change. Copper up 2 cents. Gold silver ratio is up. That would make sense. Oil is up a little bit. Natural gas is unchanged. Actually, natural gas is down 6 cents. Bitcoin is up less than 1%. Ethereum is up more than 1%. Grains are mixed. And there you have it. Okay, yesterday's activity, or Friday's activity to be specific. Precious metals, gold rallied, bolstered by silver, which ripped higher on CTA short covering above a significant technical level for some. Oil, strong, not surprising given the Middle East developments. They rallied before the news, but oil tends to discount news before it is announced. U.S. equities undid all Thursday's gains. There may be cracks in the tech sector. Bonds started very weak, but recovered even as stocks weakened. The dollar finished strong. Started strong, finished weak. Not a driver of precious metals, moved largely inverted to the bond market. Crypto, Friday was strong, but not parabolic after Thursday's massive recovery. Might be a little tired here. Stock types may be weighing on it a tad. Tech's down, let me sell my Bitcoin. Bitcoin's not negative by any means, but maybe weighing on some of the strength. There's the data this week. Today's President's Day, nothing here. News, these two comments are Fed-based, and I'll give you what they mean taken together. You can read them. Taken together, this means the Fed is not surprised by the data. They expected inflation to spike in a seasonality way. They expected retail sales to be weak in a seasonality way, and they think we're still on course for a calm target reaching. However, you're nuts if you think they're going to cut in March. That's what that says. Geopolitics, there's Netanyahu, right? And here's his cabinet saying we got his back. Okay. Michael Oliver puts out a report once a week, and we are subscribers and we share what we can with you. This one has, covers a lot of ground, but he's got about 12 charts in there for precious metals. We're going to share 3 of them with you. We don't want to give away everything that the guy does out of respect, but here's how it works. Silver. For February, we need a monthly close at 25.41, but there are only 8 trading days left. For March, that trigger level adjusts down with a monthly close at 25.28, breaking that shallow, massive ceiling out. Okay? That's the intermediate outlook, not the big picture, but certainly not what's going to happen today. Gold. By the way, in silver, he's like, we closed strong and we had strong momentum. So remember that number 2320 that I had? His number was right in that area. And so above that, he's friendly to the market as breaking out of a smaller range. Gold, however, not as excited about. Closed out this week at 2115, clears that little known to those who watch price, but potent structure that says lid off. I don't know what that structure is, but I'll have to look into it. But that's his intermediate view. His shorter term view was, hey, gold had a nice close, but there wasn't a lot of momentum into it. So I almost feel like, me personally, he's kind of confirming what I saw, which is silver led that. Gold finally caught up, and silver was running up on CTA short covering, and gold short started to cover. And they probably have some more to cover. That's what's going on today. Silver versus gold monthly spread, he inverts it, right? So the higher it is, the stronger silver is. And he looks at it like this, and he says above 1.2%, this should rally. So if you take these three charts together, he's saying that he likes the complex. He doesn't love the complex, but he likes the complex. He will be biased towards silver. And so far, his charting is confirming that bias. We have a report from a bullion bank, as the title says, and that bank is traditionally not friendly to gold, but, and we'll talk about this more later, this report is, quite frankly, very good and nuanced without being wonky. So I'm going to read a little bit from it to you, and I have some extemporaneous footnoted comments for premium. Okay, so you can read those, or I'll read those at the end to you so you can get it all in one shot. Anyway, here we go. We're also going to cover this report in detail during the week. Global commodities, gold still set to shine, but price peak likely later in the second half of 24. And I'll reveal the bank then, but not right now. We lower our 0 to 3 month, but maintain our 6 to 12 month gold price targets at 1950 and 2150, respectively. Hawkish Fed rhetoric, rebounding US dollar, and resilient economic data are pushing FOMC policy rate cuts to mid-24. And I have that footnoted. Physical bullion consumption levels appear sufficient to keep trading north of 1900, but investor outflows are bearish and further bogged down by strong equities. Also footnoted. Gold price volatility is realizing poorly and weighing on demand for topside structures and portfolio overlays. Yet plenty of macro and economic wildcard risks linger in the background, and we still project record average gold prices this year. Footnoted, that's about options, mostly. Third quarter seasonals tend to be bullish for gold, so there is time for a fresh price catalyst to reemerge in the second half of 24, be it via a geopolitical tail event or a U.S. recession base case. Central bank bullion demand still appears structurally positive and should dampen sell-offs. All right, we're going to talk about all those. Those are the footnotes underneath here, and we're going to talk about those. But let me just say this: bearish short term, bullish long term, and it's not fluff. That's it. Have a great day. I'm Vince. Look for this report during the week, but I'm going to continue on. Premium listeners, stay with us, and I'm going to read